Imagine a company so powerful that it helps manage more money than the economy of almost every country on Earth. A company connected to Apple, Microsoft, Nvidia, Amazon, Coca-Cola, and thousands of other businesses across the globe. Yet, most people have never heard its name. It's not a bank. It doesn't manufacture products. It doesn't sell smartphones or build cars. Instead, it manages investments on behalf of millions of people and institutions around the world. Pension funds, governments, insurance companies, universities, and ordinary investors. Today, BlackRock manages more than $15 trillion in assets on behalf of its clients, making it the largest asset manager in the world. But it's important to understand one thing. BlackRock doesn't own most of that money. It manages it for others. So, how did a company that started with just a handful of people become one of the most influential names in global finance? And why do so many people believe BlackRock controls the world's economy? The truth is far more fascinating than the conspiracy theories. This is the story of BlackRock. Before we go any further, we need to answer one simple question. What exactly is BlackRock? Many people imagine a giant corporation buying companies and taking control of the world. But that's not how BlackRock works. BlackRock is an asset management company. In simple terms, it manages money for other people. Imagine you're saving for retirement. Instead of investing your money yourself, you give it to a professional investment company. That company buys stocks, bonds, ETFs, and other financial assets on your behalf. Now imagine doing that, not for one person, but for millions of people around the world. Pension funds, universities, insurance companies, governments, charities, and individual investors. That's exactly what BlackRock does. Every day, it helps clients invest their money across thousands of companies and markets. This is why BlackRock appears as a major shareholder in companies like Apple, Microsoft, Amazon, Nvidia, and Coca-Cola. But here's the key detail. Those shares usually belong to the funds BlackRock manages for its clients, not to BlackRock itself. In other words, BlackRock is managing investments, not collecting companies for itself. The bigger the amount of money people trust it to manage, the more influential the company becomes. And over the last 3 decades, that trust has grown into trillions of dollars. But BlackRock didn't become a financial giant overnight. It all started with one man, and one costly mistake that changed his life forever. Every great company begins with an idea, but BlackRock began with a mistake. Long before BlackRock existed, Larry Fink was a young bond trader at an investment bank called First Boston. He quickly built a reputation as one of Wall Street's brightest minds. During the 1980s, the financial world was changing rapidly. New investment products were being created, and the market for mortgage-backed securities was growing at an incredible pace. Larry Fink became one of the leading figures in that business. His team generated enormous profits, and for a while, it seemed like nothing could go wrong. Until one trade changed everything. A mistake in predicting interest rate movements reportedly led to a loss of around $100 million for First Boston. Overnight, confidence disappeared. The lesson was unforgettable. Larry Fink realized that success in finance wasn't just about making money. It was about understanding risk. He believed that Wall Street relied too much on instinct and not enough on data. Instead of walking away from finance, he decided to build something completely different. In 1988, together with several partners, Larry Fink launched a new investment management business with backing from Blackstone. Their mission wasn't simply to invest money, it was to understand risk better than anyone else. At first, the company was small, just a handful of employees, a small office, and one ambitious idea. But that idea would eventually transform the entire investment industry, because BlackRock wasn't trying to become the biggest, it was trying to become the smartest. As BlackRock continued to grow, Larry Fink knew one thing: managing billions of dollars wasn't enough. If the company wanted to manage trillions, it needed something no one else had, a system capable of understanding risk on a global scale. So BlackRock built its own technology. It was called Aladdin. Despite its unusual name, Aladdin isn't a robot, and it isn't artificial intelligence in the science fiction sense. It's a powerful investment and risk management platform. Every day, Aladdin analyzes enormous amounts of financial information. It helps investment professionals understand how markets, interest rates, currencies, and economic events could affect millions of different investments. Imagine trying to monitor thousands of companies, millions of financial assets, and countless possible market scenarios at the same time. That would be almost impossible for humans alone. But technology changed the game. Today, Aladdin is used not only by BlackRock, but also by banks, insurance companies, pension funds, and financial institutions around the world. For many of them, it's become one of the most trusted tools for measuring investment risk. This wasn't just another piece of software. It became one of BlackRock's biggest competitive advantages. While other firms relied mainly on experience, BlackRock combined experience with data, models, and technology. And that combination helped transform a relatively small investment company into a global financial giant. But technology alone doesn't explain BlackRock's incredible success. The real question is, how does BlackRock actually make money? Because surprisingly, it isn't by owning the companies people think it owns. At this point, you might be wondering, if BlackRock manages trillions of dollars, why isn't it the richest company on Earth? The answer is surprisingly simple. BlackRock doesn't earn money by owning all of those assets. It earns money by managing them. Think of it like this. Imagine you hire someone to manage your investments. They don't own your money, but they charge a small annual fee for managing it. Now imagine doing that, not for one client, but for millions. That's BlackRock's business model. Every year, it collects management fees from the investment funds it operates. Those fees may seem small, often just a fraction of a percent. But when you're managing trillions of dollars, even a tiny percentage becomes billions in revenue. One of BlackRock's biggest success stories is iShares. iShares is one of the world's largest families of exchange-traded funds, better known as ETFs. ETFs allow investors to buy hundreds, or even thousands, of stocks in a single investment. Instead of choosing individual companies, investors can simply buy one fund that tracks an entire market or industry. This made investing easier, cheaper, and more accessible than ever before. As ETFs became increasingly popular, BlackRock grew alongside them. Today, millions of people around the world own iShares ETFs, sometimes without even realizing that BlackRock is the company managing those funds. This steady stream of management fees created a business unlike almost any other. BlackRock didn't need to invent the next smartphone or build the next electric car. It simply became one of the world's most trusted investment managers. And as more money flowed into its funds, its influence continued to grow. But that influence also created a new question. If BlackRock owns shares in thousands of companies, how much power does it really have? Spend a few minutes on the internet, and you'll probably come across one claim again and again. BlackRock owns everything. But is that actually true? Not exactly. Here's where many people get confused. When you look at the shareholder list of major companies, Apple, Microsoft, Amazon, Coca-Cola, you'll often see BlackRock near the top. At first glance, it looks as if BlackRock owns a significant part of the world's biggest businesses, but the reality is more nuanced. In most cases, those shares are held through investment funds managed by BlackRock on behalf of its clients. That means the money belongs to pension funds, retirement accounts, insurance companies, universities, and millions of individual investors. BlackRock acts as the manager of those investments, not the personal owner of all that wealth. However, managing such a large amount of capital still gives the company enormous influence. As one of the largest shareholders in many public companies, BlackRock has voting rights attached to the shares held in many of its funds. Those votes can influence decisions such as board elections, corporate governance, executive compensation, and long-term business strategy. That's one reason why governments, investors, and financial experts closely watch BlackRock. Supporters argue that the company helps markets become more efficient, offers low-cost investment products, and gives millions of ordinary people access to diversified investing. Critics, on the other hand, question whether so much financial influence should be concentrated in the hands of just a few large asset managers. It's an ongoing debate, and one that continues to shape the future of global finance. Whether you see BlackRock as an innovative financial company or as a symbol of concentrated market power, one thing is impossible to deny: its influence reaches almost every corner of the global economy. More than 3 decades after its founding, BlackRock has become one of the most influential financial institutions in history. Markets continue to evolve. Artificial intelligence is transforming investing. Millions of new investors are entering the financial system every year, and passive investing continues to grow around the world. As long as people keep saving for retirement, investing through pension funds, and buying ETFs, companies like BlackRock will continue to play a central role in global finance. But with greater influence comes greater responsibility. Every investment decision, every shareholder vote, and every market crisis places companies like BlackRock under even greater public scrutiny. The financial world is changing faster than ever, and BlackRock will almost certainly be part of that story. Whether people admire the company, criticize it, or simply don't understand how it works, its impact on modern investing is impossible to ignore. But perhaps the most interesting lesson isn't about BlackRock itself. It's about how money moves. Most people imagine wealth as piles of cash, luxury cars, private jets, or billion-dollar mansions. But in reality, the world's greatest fortunes move silently through investment funds, financial markets, pension accounts, and long-term ownership. That's where modern wealth is created, and that's the world BlackRock helped shape. So, the next time you hear someone say, BlackRock owns everything, remember, the truth is far more interesting. BlackRock doesn't own the world's wealth. It helps manage an enormous part of it. And in today's financial system, that may be even more powerful. Thanks for watching. If you enjoyed this documentary, subscribe to Behind the Money for more stories about business, investing, and the companies shaping our world. See you in the next one.